unprecedented possibility for India.
All right, that is Gautam Adani on the big opportunities from green energy. So that is an important word coming in. But let's talk about the big news story over the weekend. A CNBC-TV18 news break has been confirmed in a big boost for the steel sector. The government has rolled back most of the export duties on steel and steel products. So Nigel is here to break it down for us and take us through the details. Nigel.
Well, the government of India has rolled back most of the export duties levied on steel products in May 2022. On steel, stainless steel, pellets as well as iron ore with sub 58% Fe content, it's been reduced to zilch, that's zero. On iron ore with 58% plus Fe content, it's been reduced from around 50% to around 30%. On coking coal, however, they have reintroduced the 2.5% import duty. Now, what could have made the government of India pull back this export duty? Well, the key purpose was to achieve lower steel prices, and that's happened. Additionally, steel demand has been hampered as the export window was shut. This led to steel inventories rising in the month of September-October to the highest we've seen in 20 months. India exported, remember, 13 million tons in FY22. But since the imposition of export duty, it has resulted in the gross exports falling to an annualized rate of just around 5 million tons in that period of from July to around October. This could result as well in a slowdown in capex, which isn't good for the country. That's for India. Finally, the trade deficit numbers have been worrying as India became a net importer of steel in October 22. And the steel imports rose to its highest levels we've seen in the last couple of years. That's since October 2019. Let's analyze the stock impact then stock-wise. For steel players like Tata Steel, JSW Steel, JSPL as well as SAIL, the positive is that the reopened the export option, this particular move. But the domestic prices, they're at a premium in comparison to export prices. Jeffrey says the domestic prices are at a 15 to 20% premium in comparison to landed imports. Stainless steel companies like JSL Stainless as well as JSL Stainless SR, well, they'll be beneficiaries as well. The company earlier exported 25 to 30% of their volumes. That's fallen to around 5%. Additionally, production disruption in Europe, that's going to be good news for stainless steel players. Moving on then, Godavari Power and Ispat, they'll also be a key beneficiary from the reduction in pellet export duty. ICICI Securities says that pellet producers in central as well as eastern India, they have pushed up prices by around 1,000 to around 1,500 rupees per ton. For iron ore producers, NMDC, they'll be a key beneficiary. They don't export directly, but if pellet prices are going to be moving up, then iron ore prices as well will get a bit of a tailwind. ICICI Securities says that Odisha-based miners, they are contemplating a hike of around 500 to around 700 rupees per ton. The import duty of around 2.5% has been reimposed on coking coal, as I said. Nomura says that the coking coal cost could increase effectively by around 600 rupees per ton. In terms of brokerages, we'll run you through a few. Jefferies, they say it's unlikely to provide much support to the Indian steel prices in near term. They have a hold rating on Tata Steel and underperform on JSW Steel. Moving to Phillip Capital, they say it's positive for the entire ferrous pack in the medium to long-term perspective, but offers no near-term benefits at this point of time. While ICICI Securities, they say that they perceive the rollback of export duty as a valuation re-rating event rather than an earnings upgrade. So the stocks will be in focus, but we'll need to see who are the bigger beneficiaries. Godavari Power and Ispat, NMDC as well as JSL Stainless, they will be the key stocks, clear-cut beneficiaries out there. Back to you.
All right, Nigel, thanks a lot for taking us through that entire explanation.